Hello, my name is Nya-Teach-E, your teacher. We have already looked at the trading account, the profit and loss account, and in this lesson, we will discuss the trading profit and loss account. This is the combination of the trading account and the profit and loss account, where you now form a single document. At the end of this account, you will be able to determine the net profit or net loss made by a business. This is the format. You start with the name of the business, the name of the statement that you're drawing, which is the trading profit and loss account, and then the date at which you're drawing this account. The left side is the debit side, the right side is the credit side. And then the first part of the account, the first part is the trading account. You begin as usual by entering the opening stock. Then below that you add take purchases plus carriage in minus returns out minus drawings. After your calculations that is when you will get net purchases, which you will add to the opening stock and get the cost of goods available for sale. Proceed to subtract the closing stock given, then you will get the cost of goods sold. That's what you will have on the debit side. On the credit side, enter the sales made by the business, subtract returns in, which are also called sales returns. You will therefore get net sales. Then to balance this account off, you will take the net sales minus the cost of goods sold and get the gross profit made by the business you're looking at. This gross profit is what you will bring down into the profit and loss account. You bring down the gross profit into the profit and loss account. In the profit and loss account, we said we are recording expenses and revenues. Expenses and revenue. Some of the expenses that you're going to enter include carriage out, insurance, electricity, water bills, general expenses, depreciation, discount allowed, commission allowed, rent paid, salaries, and any other expense. And then on the credit side, you have discount received, rent income, commission received, or any other income received. Simply remember that in the profit and loss account, in the debit side, you're entering expenses, the costs incurred by the business to run. The operating costs incurred by the business are what you're entering on the expense side. And then on the credit side, you're entering income or revenue made by the business. Money coming into the business. On the debit side, we are recording money going out in order to make profit for the business, which we will also bring down here. And that's how the trading profit and loss account looks like, a combination of the trading account and the profit and loss account. And we are saying you begin with the trading account followed by the profit and loss account. Are there any adjustments made on this account? Yes. On revenue, if you're told that revenue was paid in advance, we call that prepaid revenue. If it was paid later after the trading period, we call that accrued revenue. And for prepaid revenue, you will subtract prepaid revenue from the revenue to be received, and then you will add accrued revenue to revenue or income to be received. For expenses, if you're told that there are prepaid expenses, simply subtract these prepaid expenses from the expenses to be paid. If they are accrued, add. On fixed assets, you will come across the term depreciation, which simply means decrease in value on fixed assets because of wear and tear. And we have this in percentage. It is a percentage of the cost of a certain item. And in the trading profit and loss account, depreciation is an expense. In the trading profit and loss account, depreciation is an expense. Therefore, you will debit that entry, and then in the balance sheet, the value of the asset is recorded and you subtract depreciation. of importance also to mention is that prepaid and accrued amounts are what you take to the balance sheet. If you're told to draw up a trading profit and loss account followed by a balance sheet, you carry this prepaid and accrued amounts to the balance sheet. So that's it simply for the trading profit and loss account. Now let's quickly look at an example of how you're going to draw a trading profit and loss account. The question given, which you may not see on your screen, is for a business called Mumias Traders. Mumias Traders, you are given a trial balance, which looks like this. Let me just show you. It looks like this. We have capital as 125,000, purchases 45,000, carriage outwards 2,000, stock 25,000, sales 120,000, carriage inwards 1,200, insurance 5,900. Salaries are also given, discount allowed, debtors, creditors, discount received, bank and machinery. There's also additional information where you've been given closing stock, outstanding salaries, which can also be called salaries that are due. Insurance is also given, paid in advance, prepaid insurance, and depreciation on machinery is 1% on the total cost. What is required of you to prepare the trading profit and loss account for the period ended 31st December 2004? And also a balance sheet as at 31st December 2004. Let's begin with the trading profit and loss account. You will begin by drawing the trading account first. How does the trading account look like? We have opening stock, which has been given as opening stock is given as 25,000. We'll have it there. Followed by purchases. 45,000. Carriage in. Do we have carriage in? Yes, carriage in 1,200. Do we have drawings? No, we don't have drawings. Let's get net purchases. Net purchases will be 45,000 plus 1,200. 46,200. When you add that, that is when you get the cost of goods available for sale. Plus 25,000. We have an answer. 71,200. Then let's subtract closing stock. Closing stock 25,000. We're subtracting this. So minus 25,000. 46,200. Great. This gives you the cost of goods sold. Sales. Sales are given as 120,000. 120,000. Do we have any sales returns? Any sales returns? No, we don't. So our total being 120,000. Let's find gross profit. Carry down. 120,000 minus 46,200 will give you 73,800. 73,800 gross profit brought down 73,800. Gross profit brought down is your first entry in the profit and loss account. Now let's input expenses for the business. Expenses, there's mention of carriage out. Carriage out 2,000. We have insurance as 5,900. Salaries 12,450. Discount allowed. Discount given to customers. Discount allowed 3,400. Discount received is a revenue. It will be on the credit side. Discount received. This came into the business. 1,950. Debtors, creditors, this ones are for the balance sheet. Bank for the balance sheet. Machinery 128,000. There was mention of we have additional information. Insurance. So insurance 900 shillings has been paid in advance, and it said if it is prepaid we subtract. So we're going to subtract 900 from this. And then outstanding salaries 450 accrued. This is accrued, so we'll add 450 here plus 450. Depreciation on machinery is 1% on cost. So machinery depreciated by 1%, that is 0.01 times 128,000 gives you 1280. So depreciation for machinery is 1,280. Let's do the adjustments here. For insurance, we'll record 5,000. Let me just write. Don't do this. Yours should be clean. 5,000 here. This will give you 12,900. Yeah. That's it. Let's get our totals. See what we have. Getting our totals. 73,800 plus 1,950 gives you 75,750. 75,750. That's the total we are hoping to get, so that we determine net profit. 2,000 plus 5,000 plus 12,900 plus 3,400 plus 1280, 24,580. Your total expenses 24,580, but to get net profit carried down, you will take this total 75,750 minus total expenses to get net profit, which is 51,170, and your net profit brought down is exactly that, 51,170. Yeah, that's how you draw the trading profit and loss account.